Hello, and joining us on this episode of the Mortgage and Protection Podcast is Paul from Henchurch Lane to explain how the mortgage process works if you have complex shareholding. It's great to chat with you, Paul. How are you doing?
As always. Yes, great, Tessa. How are you?
Good, I'm glad to hear it. And yes, all good to thank you. So
Good,
let's
good.
look at the questions that we've got here then. So,
Yeah, let's go.
first of all, we've got two questions in one actually. So,
Okay.
can I get a mortgage using the business shares I own? Do I need to own more than 50% of the company to use my income for a mortgage?
Okay, so yes, absolutely. You can get a mortgage if you're a company director. Most lenders need to see that you own normally 20 to 25% of the business to treat you as a self-employed managing director, which they will do at that sort of level. You
Hmm.
don't always need to own more than half. The main thing is that your shareholding gives you access to the income or the profits that the business is generating. So
Hmm.
if you own less than that, the likelihood is they're going to be looking at your pay slips only. So as long as it's more than that and you've got a shareholding of above 20 to 25%, there's a good chance we can use it for affordability.
Right. Okay. So that explains that there. That's good news as well. So just following on from that, what type of income do lenders look at? Salary, dividends, or both to confirm there?
Yeah. Okay. So most lenders are going to look at your salary and your dividends combined, because that's the total sort of personal income that you're going to be drawing from that business. And some other lenders, maybe a little bit more specialist, also could look at the net profit plus your salary of the business. So if you're one of those directors that leaves money in the business rather than drawing it down as dividends, that could be a sensible choice for you guys to look at as well.
Hmm. Right. Okay. So something to bear in mind there. Now, can I get a mortgage if my income changes from year to year?
Yes, you can. Most people's income as a self-employed person or as a director will do.
Hmm.
It's unlikely to be consistent, but it depends in what direction the income is going as to how that will be assessed. So if it's gone up year on year, then most lenders are going to look to average out the latest 2 years. There are some that will take the latest year with a good explanation or justification from your accountant.
Hmm.
But if it has dropped, then usually they're going to take the lower figure or the most recent year, and they're probably going to want to know a little bit more as to why that's happening as well. So,
Hmm.
a little bit more due diligence from them if the income is going down steadily.
Okay, so again, that's a point to bear in mind as well. So another question here asks, how much can I borrow based on my shareholding?
Okay, so your shareholding itself doesn't limit how much you can borrow. It's more about your income and profit share. So really, it's the combination of the both of them again. Typically, if you add those two things together as a self-employed person, an average kind of multiplication that most lenders might look to aim for is somewhere between sort of 4 and 5 times your annual income. And that's going to depend on obviously your credit,
Hmm.
the loan to value, so how big your deposit is. Some lenders will offer more than that, but as a general rule of thumb, it's going to be around about that sort of figure.
Okay, so that just gives you an idea there. But yes, lots of different factors involved with borrowing. Okay, so moving on to this question, people would like to know, do I need to have filed my latest tax return before I apply?
And so the general rule here is that the accounts you're providing to a lender will have to be done within the latest 18 months, within the last 18 months, sorry. So
Hmm.
as an example, October is generally about 18 months later than the previous year's deadline. So a really good example to use would be October 2025. That was last month.
Hmm.
At that point, accountants should have filed your 2025 figures by that point, okay? Because the 2024 figures are then more than 18 months old.
Hmm.
So that's what you're really looking at. When was your last set of accounts submitted? If that was more than 18 months ago, get in touch with your accountant and get them to bring them up to speed.
Hmm. Okay, well, there we go. That answers that one clearly. So let's look at the next question. Can company profits I haven't taken out still be used to help me borrow more? So another borrowing question.
Yes, absolutely. In this instance, what we touched on earlier, where
Mm,
people leave money in the business, you're going to be looking, if you want to utilize that money towards the affordability, you're going to be looking at one of those more specialist lenders,
mm,
or one of the fewer sort of from the a smaller pool of lenders who will look to factor in the net profits and your salary rather than the dividends, which is what you've drawn down on. And in some cases, lenders can even look to apply retained profits, so profits that have built up from the previous years. If
mm,
you get quite specialist, there might be options for you there as well, depending on the bigger picture, as always, of course.
yes, okay, but positive news there. We're getting through
Yes.
these questions now, so moving on again. Will having more than one business make it harder to get a mortgage?
I wouldn't say it would necessarily make it harder, but it can make things more complex in terms of the application. Generally speaking, that's going to be from an evidence point of view. So the list for evidence for people in that position is a little bit longer than it would be for your PAYE people.
Mm.
And therefore, if you're doubling up on that because you've got two businesses or even more, it's just going to be administratively a little bit more difficult, but not more difficult for you to secure a mortgage, I would say.
Right, okay. So a point there to be aware of, but also good news. That leads us on to the next question. We know that preparation is always key. So just to confirm here, what documents do I need to get ready before we start?
Yeah, exactly that. Sort of following on from that question beforehand, then. So, if you do have multiple businesses, it's going to be a little bit more difficult. But what they're going to be looking at for someone as a director or a self employed person is at least a couple of years' worth of accounts or tax returns. They're going to want the same couple of years for your tax year overview documents and your tax calculations.
Mm,
They're going to want 3 months' worth of bank statements at least. That's going to be personal and potentially business as well. And then your usual things that you're going to get with any application, which is your ID, your proof of address, and your deposit proofs as well. So
mm,
it can stack up. And if you're multiplying that by two or three, then you can imagine there's a fair amount of paperwork involved.
mm. Yes, definitely. But there's your breakdown anyway. So hopefully that's all useful. Now, will my credit history matter as much as my company accounts?
Yes. In a
Yeah.
word, your personal credit score is still matters. It's still one of the biggest factors. Even though your income comes from a business, the
Mm,
mortgage will be in your personal name. So a good personal credit and responsible borrowing is really going to help your case go from being, very difficult to place to relatively straightforward. So always
mm.
pay attention to your personal credit.
Okay, so that really is key there. Now we've got three questions left for this episode. So, can we apply based on my latest year's income if it's higher than before?
Yes. Um, So some lenders are going to take your most recent year if your business is growing steadily and there's that justification from the accountant that I mentioned earlier.
Mm,
Others are going to average it out. So they'll take the latest 2 years and they'll average that. And that's the figure they'll use for the affordability calculator. Increase in income, whichever way you look at it, it is a positive, right? It's better than
mm,
the alternative, which is decrease in income. So it's not something you should be worried about, in my opinion.
mm. Okay, and yes, very true there as well. Right, so how long does it usually take then to get approved with this kind of setup?
Okay, so as a brokerage, which is what I can obviously vouch for,
Mm,
what we do here at Henchurch Lane, from application. So once you've given us all that information and we've submitted it to the lender, the average kind of turnaround for us, time frame wise, is about 10 days. Obviously, you're going to get cases that drag their heels, but it's usually down to providing the exact evidence that the underwriter is going to ask you for, rather than a service level issue at our end. So
mm,
it really comes down to how quick and proactive you are with what they ask you for, basically.
mm. Okay, so preparation is key, isn't it? Being organised is
Absolutely.
key.
Yeah,
And
100%.
then sorry about that, Paul. I'm butting in, aren't I, all the way through this?
Always,
Um,
always interrupting.
always. You've demonstrated how a mortgage broker can help actually throughout this, but have you got anything else you'd like to add?
Yeah, so it's just going to make it a lot easier for you. So with all those nuances, everyone's situation sort of feeds into that completely differently. So what
Mm,
documents you're going to need, what approach is going to be best for you, what lenders are going to look at you in the most favourable lights. There's going to be stuff that my brokers know off the top of their heads because they do these cases day in and day out. So it's just their bread and butter, really.
mm,
Not something that I would recommend for the faint-hearted trying to work their way through self-employed or managing director criteria. So
mm.
it would just take the stress away.
Okay, well, there we go. Thank you for that, Paul. Hopefully, that has proved useful to anyone listening to this, watching this video. And I know we'll be back with another episode soon.
I look forward to it. Take care, Tessa.
You too. Bye bye.